Good morning, everyone, and welcome to the European crossover webinar. And we're seeing the dollar holding up relatively well, and the euro has just eased back just a bit here. We're also seeing as far as the gold market. Just go this over here. Has gently started going and pull back from this area here. We do have our Asian analysis that we're going and jump into right now. We've also seen the euro, not the euro, but the Dalian push back into this almost in here, this 890. Had taken a small short into on Friday and then ended up getting stopped out in Asia at 65. And we've since even pushed even higher than that, a good even 25 pips even higher than that. As we've stretched this area here, one of the key things was on the Dalian also is that we had, if you look on here, we closed above this 927 pivot here on the Dalian. Before we go and get started, we will take a look at what the economic events are so far. And we do have a Eurozone Centix index coming up at the bottom of the hour, along with Italian inflation coming up. And then Eurozone price is also at the top, going to be at the top of this next hour. Also, we do have, coming into the States, we'll have building permits and Canadian housing starts, as well as napalm. And trading relatively quiet here is the cable here. So let's go in and just do a quick overview with the morning bid, and then we'll move into the Asian analysis, or the analysis that we had for today, and then go right into the bias chart. So looking into the morning bid, it says the warm glow from a forecast busting U.S. employment report and January ISM business survey have buoyed world markets early on Monday, even if a holiday week in China and across Asia subdued trading activity. The reconsideration of the U.S. economic pulse can be best seen in the jump in the U.S. Economic Surprise Index to its most positive level since May of last year. Even though disappointing Amazon results and second-guessing the U.S. Federal Reserve policy clipped Wall Street's gains on Friday, Japan's Nikkei index added almost 0.5%, and Hong Kong opened up for half a day, was up 0.2. Dalian rose close to 110. We were just referencing that, with the dollar's index higher and the euro a shade lower. China's offshore and emerging markets currency index dropped for the second straight day. 10-year Treasury yields back to up as high as 2.70 for the first thing Monday. The Fed's signaling of flexibility and patience, or the fact that it's not on autopilot, as Morgan Stanley put it on Sunday, has driven the rally in stocks and rising markets over recent weeks, but the surprising strength in the underlying economy in the most recent report suggests it could yet plow ahead with its tightening plan. The combination of recent U.S. government shutdown and the effects of the severe polar vortex freeze in North America could see some significant data distortions over the coming weeks. In Europe, however, a combination of still weak Eurozone economic readings and the risks associated with Brexit are likely to stay the European Central Bank this year at least, and ECB policymakers, Mersch and Novotny, speak later in Budapest. European stock futures are opening to a flat opening. It's a heavy week of earnings, again, both on both sides of the Atlantic, although Monday in Europe is thin. And looking at the events we have coming up, we do have, as I mentioned, Italy January inflation, Spain jobless rate, Eurozone producer prices. Did see something here just a little while ago in regards to the jobless rate, and I think that was for Spanish jobless rate that being a bit higher. I don't see it right now. Yeah, it says Spain's jobless rate rises. rises by 2.61% to 3.3 million. The number of people in Spain registering as jobless rose by 2.61% in January from a month earlier, or by 83,464, leaving 3.3 million people out of work. Data from the Labor Ministry showed on Monday. And on to the just two other stories, the Aussie dollar and the dollar itself, or overall dollar. The Aussie dollar observes more dollar data ahead of the RBA meeting. The Aussie dollar faltered on Monday after dire home building data dealt another severe blow to the economic outlook and added more impetus to speculation about a cut in interest rates. The Aussie dollar eased slightly to 72.42 and away from last week's 2-month peak of 72.95. The New Zealand dollar was steadier at 69 cents. The Aussie had to deal with more disappointing data as approvals to build new homes dived 8.4% in December, confounding forecasts of a 1.8% gain and a second month of outsized losses. That took approvals to the lowest since mid-2013. Sliding home sales and tighter lending rules by banks look to have hit the high-rise sector particularly hard. If highlighted, the stakes at the play when the government releases the findings of a major inquiry into Australia's scandal-ridden banking system later on Monday. Approvals are now signaling an unambiguous further weakening, with it clearly seeing declining new dwelling investment detract from Australia's growth in 2019. That would be unwelcome news to the RBA as it holds the first policy meeting of the year on Tuesday, and is already expecting to have to trim its upbeat forecast for economic growth and inflation. Figures on retail sales are also due on Tuesday and are the forecast to show a drop of 1/10 in December as consumers turned cautious after spending big online the previous month. And lastly, we'll just go and finish up with the dollar. The dollar finds support on U.S. jobs data and Aussie dollar weaker. We just referenced that. The dollar held near a one-week high against the yen on Monday, supported by stronger than expected U.S. jobs and factory data, although gains are likely to be capped in caution about the Fed policy and thinned holiday trade in Asia. Data released in Friday showed the U.S. economy created 304,000 jobs in January, the highest in 11 months, which beat street estimates. The greenback was marginally higher versus the yen. Now, that was at 944, but like I said, we're well higher over that. The non-farm payroll was a strong number and is supporting the dollar. Dovish Fed had hit the dollar yen, but rising stocks and solid U.S. data have led to this bounce back in the dollar versus the yen, says Nick Tooledale. Solid jobs report also allayed concerns of the slowdown in the U.S. economy, leading traders to trim expectations the Fed would need to cut rates to support the economy. The benchmark Treasury yield was at 2.69%. China's financial markets are closed all week long for the Lunar Year holiday. Other Asian markets are also closed for parts of the week. The Aussie dollar was lower by 0.2 to 70.34. Markets are now awaiting the next catalyst, and most likely will be news coming out of the ongoing U.S.-China trade negotiations. Despite the stronger labor markets, the U.S. Central Bank is widely expected to keep rates steady this year, thanks to heightened worries over global health, especially in China. Growth in the euro area has also been weaker than expected, with Europe's main economic engines, France and Germany, slowing down. So that wraps up here for the news. And like I said, as we go on, we'll continue to keep the news fairly light unless there's something significant hitting. As I mentioned, jumping here into the analysis. So since the euro managed to close above the 1445 daily breakout level, European EMAs are in buy mode. A daily close below 1426 will have the market on the defensive. A daily close above 1490 will reinvigorate the bullish mode. So we'll go into the daily here on the euro, trading a bit on the defensive. And one of the things we had looked at, if you remember on Friday, I've carried along, but I wanted to go on and exit out and make sure I was out, because I thought that our initial resistance we were looking at, if we had done some work ahead of that, and I liked that 1532, but ahead of that we were looking at 14, I think it was 1488, and I think the market, it didn't even make it up too high on Friday when that news came out. I mean, look, we got up to, there we were. It was 1489, so that was a high there. And one of the concerns we had was, as the market backed down the day before, we one of the things we'd looked at from the previous day was it was so reminiscent of what had happened the last time when the euro had made that high. Matter of fact, one of the things I shared in the charts in the Asian session that was on Thursday ahead of the jobs report was that if you looked at it, the pullback was reminiscent. Here we are looking at a 2 hour, was reminiscent to the same way a run up, then a yank down, and then a drift back, and we were almost playing the same tune. And while I was looking at around 1488, I think the high was what, as I said, I think it was 1489, and then from there we just started to kind of drift. I mean, if you look on here, we actually had I don't know if you can call it a gravestone doji, but it certainly wasn't anything positive. And from there, the rest of the market dripped, and so we opened the door for a little bit of a pullback. We're holding well overall. In light of that, we do have news later on. So we're holding just above this key breakout area here. My concern is that we don't, you can see right here, this 1426, you see where the market right here, it holds. If, like I said, this is the key daily breakout, 1445. You don't want to have that. And you could almost have one day where it would actually slide below it, and then we try and hold, and maybe one day below it won't ruin everything for the bulls party. But if you get to 1426, you can see right here coming right across, you take out that area on a daily, that really would turn everything negative, and you start losing all the momentum at that point. But we're trying to hold right now. We have a little bit of European data coming up. So as we come into today, I know that 1426 is important. Let's go and take a look here on the 2-hour chart. It's going to be right there, 1428. 1428 for support. And that's going to be the resistance right there. 1487. 1487. Right here. And we'll keep that 1531. Remember, so that was if we get this boost of that run. Remember, we talked about the significance of the 1532, 31-ish area here. Right in there. We pulled it all the way back. Looking all the way back, coming across here. And I'm not sure where that line is here. I think we may have it on the on our 30-minute charts going all the way back. But it's certainly, like I said, that 1532 is very important. But we're a long ways off from there right now. Right now, we're trading a little bit on the defensive here. So let's go move into the cable. So it says Gable spent most of last week paring back from an overbought scenario. A break of support level 3062 opens the door for 2987. 3018 is going to be the 23% with resistance at 3153. So let's take a look where we stand here with Cable. So we're just, like I said, we spent most of last week paring back, and we're looking for, if we do get this break, we talked about this support being, and we're just sitting right here on support, trading relatively quiet when you think about how active Cable had been over the last few weeks. But you can see the support here at 36.2, and we mentioned a break of 30.62 will open the door for a test back down here to 29.87. Support does come here at 30.18. That's the 23% of this entire range, 23.74 to 32.16. It certainly looks like it wants to go on and slide back in here, at least for today. Right now, we're going to come in here. There we go. So support right now for today, we're just going to mark it here as 30.18. First initial area of support. And that's going to be support right there. Not support, but resistance coming in right there at 31.16. Let's go moving now to the Aussie Dollar. Since the Aussie Dollar relinquished Thursday's gains, but still close above the key support at 72.23. Key support on the pullback is going to be 72.04. Resistance comes in at 73.29 with bars what should be aggressive coming in around 71.66. But like I said, key support on the pullback is going to be the 72.04, but they did close above that 72.23. Going to take a look here with the Aussie. Looks like we're just hanging on to this support area here. We do have the RBA up tomorrow. You can see here, right here, this 72.33. We're just easing back just a little bit below that. We mentioned here key support coming in, or the initial support here, 72.04. So that's going to be our support area here for the Aussie. Certainly looks like it wants to make a beeline for this 7204. And 7212 would be the 38%. Yeah, I like that 7204. Let's go and take a look as far as resistance. Split the difference here, but yeah, resistance would be 72.69 here with the Aussie. We are starting to see here, this is on a 2-hour. Generally, I don't use the exponential moving averages on the 2-hour, but you can see here momentum is starting to turn lower, which should probably open that door for that test for 72.04. The resistance for now is going to be the 72.69. Certainly still bullish. I'm going to keep the euro as bullish as long as we were able to maintain that 14, just above this 14.45, which then takes us now to the dollar Swissy. Well, certainly with the dollar and improving after the jobless report, non-farm payroll report, we're certainly trying to make that move higher here. And we're right there, resistance here if you look at 99.72. But this would be the key. This is the real true area here. Remember, this stuck here there for the longest time, so we'd actually have to be right here at this, we can call it 99.90. And the momentum certainly has turned higher here. As far as support, comes back all the way here to 99.43 for support. But things have turned up even in the exponential moving average. And generally when you get like a dip here and a fake here, you'll just see a continued drive for momentum. It's still trading relatively quiet here on the 2-hour chart, but it certainly has that move higher. But the key is going to be that 99.90. That would be what we'd have to go on and take that out. And on the short-term basis, it's going to be 99.44. And let's go move into the dollar CAD. So as the dollar CAD exceeded the initial target, remember we had that target all during at the beginning of last week, 31.20, which was the 61% of this move of 31.80 to 36.64. The weekly support level is 30.89 with a secondary target of 30.43 with upside resistance at 31.53. So let's go and take a look at that. Well, you can see what we're talking about here, this 30.89 here. And if you look at it, I mentioned it was weekly support. You can see the significance here on a weekly of this 30.89. And that's kept the market in check. We saw a little bit of a bounce here. We're seeing the market kind of push, keep that push lower. Certainly what was helping that was obviously the higher move up here in crude oil, which actually is at a key resistance area right now at this 55.25. But we'll get to that shortly. But you can see right here the significance of the 30.89. Let's go and move it back into the daily. Well, we exceeded that. Excuse me. We exceeded that 61% here on the 31.20, and really the next level is actually here, this 30.43. If we're going to go make that move, and honestly, I'm surprised we're not even lower now in light of what crude was able to do on Friday. So this is a real area of support here. I mean, this is what we held up here when the market's trying to hang on to 30.89, but where are we going to go to if we're going to break lower? Well, certainly you can see 30.43 is the area that they're going to make a move to. I think it was mentioned, I don't know if it's Steve or still is, it's probably, I guess maybe this is what they're referencing here, this 78% down here. But as we mentioned, generally, we're just looking at a very short-term basis, so we would see a pretty decent pop here at 30.43, which is still another 50 pips away. I'm not saying we're going to get there today, but I'm a bit surprised that we haven't got there in light of what crude's already done. So 30.89 for right now. That held up from this last week. We saw a little bit of a short covering there, but we're certainly assaulting it. We're just only about 4 pips above that. So looking at our support, it's going to be 30.43 as we start down to the week. We mentioned we were looking at 31.53 as the area of resistance. Well, we're looking at the 2-hour chart, and certainly you can see here the momentum here. We can, and like I said, generally don't use the exponentials for the 2-hour, but you can see here where we got this sell mode here, and even when we came up in here and these two lines kissed, it still remained on the sell mode, and you can see how that has just continued. It's been relentless, actually. So when we're looking at resistance, that's where the rubber meets the road at 31.53. So that'll be our resistance. Should we go on and get a bounce? And no doubt that this is bearish. Which is basically hugging here at the lows. Okay, it says WTI finished the week right at resistance level of 55.23. Just above is a 55.60, which is a 38% of the move of 42.26 to 77.11. Upside level resistance is 56.04. Okay, beyond this 38%, and support comes in at 54.48. So let's take a look at the crude oil on the daily basis here. Well, you can see this 56.05, but we closed right here going into this level right here at 55.25. Almost got a little bit of a zone here between 55.25 and almost like $2 little mini zone. We're at the lower part of this zone, but we closed right there at 55.25, and the market's still holding here. Just above, we have 55.60, which is a 38%. If we were to bolt higher, this is where your resistance area is going to come in at 56.05. To start out, I'll tell you what, to start the week off, I mean, we've already had a pretty fabulous run to start with. It's going to be 55.60 here for the 38% of this entire move that we mentioned, 42.26 to 77.11. So we'll go with that as just a short term, as a resistance initially, being that's a key fib, and we've already had a very nice run here so far. The market has barely even pulled back, so it came to the 23%. It certainly didn't ease back much, so you would expect some flurry here. So let's mark that off. And we see here, we said support would come in at 54.48. Let's take a look at that on the 2-hour chart. Certainly, we're holding up very well here on the 2-hour chart. But the support's going to come in, I mean, as we mentioned, the support is going to come in right there. And we mentioned actually 54.48, but hold on. And we may have been looking also at the daily. Right there's 54.48, but let's take a look here on the 2-hour chart. Oh yeah, there it is, right there. That's where we came up with the 54.48. So that's going to be support right here at 54.48. Initial area of support. Still holding up very well here. Although we're here at this 55.25, the market tried to ease back about 25 cents, maybe just a little bit more, and we've reasserted ourselves up here. We're still struggling a bit here, but right here at this key resistance level. And let's go and move into Dalian. This is one of the reasons I didn't stick around too long on this is that, and I had even trepidations to shorten it on Friday, was that I even mentioned that in the chat room, was that the one thing I didn't like on the, as I said at the time on the 2-hour chart, is that we were definitely going to, at that point, because I think we were trading at 9.48, was that we were going to close on, at least on the 2-hour bar, above that pivot of 927. Well, they're certainly making the most of this right now, and we're going to get into the analysis. Says Dalian has recaptured the 927 pivot. Daily EMAs remain in the sell mode, though. Daily close resistance is 977, so that's on the daily close. So you definitely don't want to see this take out 977 on a daily close. Now we're above that, and we already see trading around at 988. But as long as we don't close above, because a close of 977 is really going to open the door for now them to get actually challenged above the 110. With daily support coming in at 876, the weekly has a hammer, but still below prior week's close. So let's go and move on to the Dalian here. We take a look at here on the weekly. You can see this hammer right here, but we were still just a bit below the prior week's close. Well, we're trying to move higher, and you can see the significance here of 977. If we get a daily close above 977, it really opens the door for us to move up to this 1034. So let's go and move into the daily. One of the reasons I didn't want to hang around too much on this thing, actually, I was watching in Asia, and it should have gone and dipped into around. For starters, it should have dipped to 936. Then maybe a move back up to about 952, and then a rollback towards 927. And it started moving. I said, you know what? We're not even pairing back much. I want to make sure I keep it relatively tight stop. And I'm glad I got out. Like I said, the thing that bothered me is this closing back above this 927.0. And why at least I said, you know, I'll wait till I come into a good resistance area, see if we can come back on that. But like I said, I was, you know, glad to go and get out. We've even pushed even much higher from that area now all the way up here to 988. The key area here is 977 on the daily close. Need this market to close below 977 if you're bearish. Let's go and move into the 2-hour chart. Resistance right now comes in right there, which is 989, really basically 990. Well, it's making the most of the non-farm payroll report. You know, we're right here, right up against resistance. You can see it right here. It's important that we actually, like I said, we close. The daily close is not above 977. You get that daily close, it just really, just like we did on Friday when we closed above that pivot, it just opens the door for them to push higher. And actually, closing above 977 really opens the door. When you look at that, if you get that daily close above 9, that really opens the door for us to push higher, potentially even a move in the upper 10s, actually, if we were to get that. But for starters, it'd be the 1034. Now, the jury's still out, so it's still early, but you want to keep that in mind. Now, as far as support, for right now, initial support is right there at 958. And beyond, obviously, would be the pivot, 927. You can see it right there. So we'll go with 958. We'll keep it relatively tight. We're just clipping along here. Look at it on the 30-minute. It's just even on the faster moving average, it's staying just above here. And the Aussie Yen is holding its own right here. Now, we talked about before, remember the key 79.56 area here, and we made it up to, looks like 59.5. We'd eased back a little bit before, but we're still holding our own here. And you can see here that S&Ps are still holding above 27. So when we take a look here, it's still all about this 79.56. You can see that coming right across here. Nothing has changed so far. So it's going to be 79.56. You can make a case for right just above here if they get above here, which is going to be 79.82. This is a real resistance there. 79.98. Well, we're just holding right here. For right now, it's going to be here. Nothing's changed. We're going to keep it here at 79.56. And that's 80 cents right there. There's a minor just above here. $79.80. But this is key right here on this 56. And certainly acts like it wants to get above that. Support is going to be right there. 79.19 for support. Okay, moving on to the cash dollar index. The cash dollar index is defending the trend line support, but has yet to overtake the key weekly level of 95.65. Market would need to take out 96.07 on the daily close to reestablish the bullish mode. A break below the short-term support of 94.14 opens the door for 94.54. So let's go and take a look at the cash dollar index. Well, we know the significance of 95.65. We've replayed that so many times, it's not funny. And here, we came up here, we've got this trend line here. Like I said, I don't do too much with trend lines, but I do like to post it if it looks like we're going to see a turn of momentum. So one of the things is here is that we actually defended this here. And we held up here, just like when, about the time I remember right after FOMC, we were talking about 95. I was posting in the room about 95.35 being the support. And we got as low as 29. We kind of ambled up, remember, to about 95.40, and we just sat there. So it looked like this, it was just a matter of time, and we were just going to start heading down. And we came back and defended it, and we've held it. And henceforth, we're still going beyond that right now. And after the non-farm jobs payroll, and we're holding our own, but this is the key level, 95.65, okay? But it would take a move above 96.07. If we can get a close above 96.07, we'll turn this back towards an on-right bullish mode. At this point, you get above 96.07, you know, bulls are back in control. Think of essentially that way. Bulls are back in control. On the way down, remember, we had been in a sell mode here in the daily on the EMAs, and even when the market had rallied and it looked like we were going to make new highs, although we ran out of gas remember, 96.68 was the 61% of this entire move and was just below this key level of 96.72. Looked like things were really going to get clipped, and then we just turned around and rolled off. Well, we were still in the sell mode, and that was one of the concerns as we made this recovery off of that 95.65 area, and the market asserted itself. But as I said, we're still in the sell mode, so the bears are still in control. The thought would be to sell on the rallies, but it would take a close above 96.07 to a daily close to get the bulls back in control. So that's going to be our resistance here. There's certainly resistance before then. One can make the case probably around 89-ish or so. But like I said, this is very key right here, this 9607. We'll take a look at it on a 2-hour chart. Let's see, right there, 95.90. So we're going to put here at 95.90 for a intraday support. This probably a move to 95.90 probably would correspond with about the euro at about 13.26. 14.26 be a very important area there too. So we're going to go with this, as I mentioned, 95.90 as our initial support. But watch that 96.07. The daily close with 96.07 would put the bulls back in control. And you can see here on the 2-hour, you see how it's been in sell mode. And as I said, generally don't use EMAs. But like I said, I'm just looking at it for the momentum. And you can see the momentum has shifted higher. So the market's not going to fight it initially as we turn higher. So it's a matter of how further we can press. There's probably a little bit more resistance right here around 79-ish. But the key is right now they've reclaimed this 95.65. That's a key area here. Support on a short haul, 47, but we'll work this a little bit lower. Right there, 95.43. Finally starting to see goldies back a bit and move into the analysis here. The market reached the 1323 level target that confluences with 1322, the 78% of the move from 1160 to 1365. Initial resistance remains at 1334. A pullback to 1304 is reasonable for a pause to refresh, but market remains in a buy mode. So let's go and take a look here. Now, this was our big target area, this 1323. Remember from like 3 weeks back, or actually almost 4 weeks, we've been talking about this 1304. The market's really struggling. And once we closed up real solid here, we said, hey, look, that's not going to hold this thing back. We have to be realistic of where this market can go to. And we talked about how the market had not even paired back for the 61%. It just kept and maintained its buy mode. So once we saw this smart rebound, we knew that this 1304 is not going to hold it in check. So where was the next target? And we had this resistance level here coming at 1323. That confluence with the 1322, the 78%. Well, the door was still open for us, even as we got above here. We sat here, came around here. Mark's kind of sitting there. But it was all going to be a matter of, and you can see here as we close on Friday, can the market make one more stab? And that one more stab, if we could, and we could trigger some stops, would probably take us right to around 1334. Right there, okay? Coming across. But the dollar's still holding its own. Equities are still holding its own. Dalian is pushing hard. Look at it. We're still holding around this 988. So it's allowed the market to go on and push lower. So although we're still in a buy mode, but I think the target, as we were referencing for support, was reasonable in light of everything, is going to be this 1304. You might see some support in between come in. I remember that where we'd use that going into NFP was 1308. Okay, and right there, you can see right here, I'll call it 1307. So let's call our initial support at 1307, but I think a move to 1304 is reasonable. So I think a move right here at 1307, you should find some support right there. So let's go with this. And that's going to be resistance right there. 1315. That'll be resistance for right now. The market made one more little last stab up in here. And from there, it's just been pretty much downhill. And you can see the support coming in at 1307 here. Let's take a look where we stand here with the bunds. Things have definitely slowed down in Europe and really opened the door for us to move higher. Well, bunds have started to pair backs that may at least keep the euro from falling apart, but we're still holding here right at this daily breakout level, which is a 1445. Still holding that daily breakout level for now. Support, well, you see this 38%. They've actually dipped just a little bit below that. And right there, we're going to go with support at 6508. Resistance fairly clear right there at 65.36. We're just languishing here and relatively quiet. I mean, we'd already taken that dip here in the DAX, but they're holding up far better than I would have expected at this point. If they can try and push some stops here, it's going to come in right there at 12.235. 12.235 for resistance. And for now on a short go, it's going to be 11,101 for support. So the key markets that we're just looking at right now is going to be gold. Obviously, we were starting to rotate lower as the dollar's holding its own after that strong non-farm payroll. Gold had made it up to this 1323, which key level there, which confluence with the 1322. Looking for a respite here. We talked about 1304 on the analysis would be reasonable from last night, and that looks like where they're heading to. Although we have some initial support at 1307. And next key story, obviously, going to be the Dalian. The same thing here. We recaptured the 927 on Friday. That opened the door for us to challenge higher. And the key level for today on the daily close on the Dalian is going to be this 977 right here on the daily. If you're bearish, you don't want this market to close above 977. It really is going to open the door for actually for them to move much higher in the tens. But for initial starters, if we get a daily close above 977, really opens the next target area here for 1034. Because anybody we short would be looking to go on and cover. That would give it that exercise next boost, and that would take us to 1034 for starters. Looking here onto the euro. Well, we're holding the daily breakout. This is a daily breakout area. You can see here how significant this was, and we're holding it for right now. Now, could we close or slide below it? We do have some European data at the top of the hour. Yeah, we could, and slide a little bit. The key thing is if we get a daily close above 1426, this really tilts it here for us lower. And on a daily closing basis, even if you're long the euro, at that point you'd have to wonder, you know what, maybe I'll just see, the momentum's probably going to drag us lower. Why don't I try and reestablish a little bit lower if that's going to be the case? So as it's always been with this euro over the past couple of months, it's, 3 steps forward, 2 steps back. It's just really hard to gain any type of momentum, upside or downside. But that's going to go on and conclude it here for the European crossover webinar. I'll go and get this posted in the room. And thanks for joining us.